Well, financial technologist Stephen Diehl says crypto technology does not solve a real problem. In his piece, The Case Against Crypto, he writes, crypto coins are simply speculative gambling products that only create a massive set of negative externalities on the world. This is technical regression and flirtation with ecological disaster in a time when we cannot afford to gamble our planet's fate on pyramid schemes and dog memes. Stephen is joining us now. And Stephen, I know you also heard Glenn Goodman of eToro name check you in our previous segment. So first, I will give you the floor to your reaction to what he said.
No, I totally agree with what he says. I mean, there's definitely a need for more skepticism about crypto. I'm a software engineer and crypto non-believer, but I'm very much in the kind of Warren Buffett and Jamie Dimon school of thought on crypto. And a lot of us have been trying to wave our hands around for years about the problems with crypto, much to little avail with the latest collapses.
When you talk about the lack of a point or a use case for crypto, I immediately think of what we saw happen when Russia first invaded Ukraine. There's a censorship. I don't know how else to call it. That's kind of a jargony crypto way of saying governments try and control the money flow, right? And with fiat currency, it's relatively easy. We found last year that they can do it to some extent with exchanges on crypto as well. But the point, or part of the point, as I understood it 10 or 15 years ago, was that you could work around that kind of government censorship. Isn't that, at least to some people, important, Stephen?
The problem is when you dig into the details of how that would actually work, because if you want to send money to a person in an authoritarian regime, ultimately you can't use the crypto as a currency to do things like, buy goods or services. You have to exchange it into the local currency. And if the local currency is controlled by a regime that's authoritarian, they're not going to let you cash out. And we saw this with Canada with the protests last year. We see this in China. So ultimately, it's not a very good hedge against authoritarianism because it doesn't work for that purpose.
I was thinking of it, you send money out of an authoritarian regime, right? The authoritarians are the one trying to control the use, and maybe the local government is more friendly to it. In any case, the other use case is as a store of value, which we've seen happen in many emerging markets with runaway inflation in Africa and South America. It's been extremely helpful to those who couldn't count on their own local currencies. How do you refute that?
Crypto is not a store of value. You can look at the variance of the price. It does not store value over long periods of time. It is a pure speculative asset predicated upon finding more, later buyers to buy out old investors. It has exactly the same economics as a Ponzi scheme. And look at what happened with Terra Luna this year. We thought that was a store of value, and then it all went to zero. And fundamentally, all of these crypto investments have exactly the same fundamentals. They all have the same fair market value, which is zero. And if you look at places like El Salvador, where they tried to use it as a currency, it works very poorly. It just does not work for purpose.
So did their previous currency. And I mean, a lot of the Ponzi scheme arguments you make could also be made about fiat currencies, right? If you're saying there's no intrinsic value, you could bring
currency versus investment are two different things. They have exact opposite properties. An investment should generally appreciate relative to some underlying productive activity versus a currency should have 2% inflation. So yes, fiat has no intrinsic value, but it's a currency. Crypto is an investment.
Quickly, Stephen, you were one of the signatories on a letter to congressional leadership from back in June, basically urging them not to respond to crypto financiers and lobbyists, arguing that they shouldn't create a regulatory safe haven for crypto. How would you like Washington to respond then to what we have seen take place over the last several months?
I think the actions from Washington should be twofold. Number one, they should enforce the existing Securities Act. All of the crypto exchanges operating domestically in the United States need to comply with our securities laws. And at the moment, they're in a non-compliant state. So what the SEC needs to do is bring enforcement actions against American companies that are selling unregulated securities. And number two, the executive branch should bring foreign exchanges that are basically operating counterfeit U.S. dollar derivatives, and they should probably be sanctioned. They're operating in a way that's not compliant with our laws and not in the geopolitical interest of the United States.